Well, the markets have been, well, interesting lately, haven't they? Especially in tech. Seems like things are cooling off a bit.
Yeah, no doubt. The Nasdaq Q's down, what, 11% from its high. And the S&P 500, that's taken a dip too, about 7%.
A bit of a reality check, maybe. But hey, that's what makes things exciting, right? Creates opportunities,
Yeah.
which is exactly what brings us to our deep dive today.
You got it. We're going to zero in on a company called Elastic NV, ticker symbol ESTC. They're playing big in the AI field. And their stock, well, let's just say it's had a bit of a tumble, down about 46% from its peak back in 2021.
46%, that's a pretty steep drop. So
Okay.
for everyone listening, the question we're going to dig into is this a chance to jump in? History tells us the market tends to bounce back after these dips. Could Elastic be one of those AI companies poised to rebound?
That's the million-dollar question we're going to try and answer for you. But first, we got to understand what Elastic actually does. In a nutshell, they offer this really powerful AI-powered search tool called Elasticsearch. Now, this isn't Google, all right. Think of it as a super sophisticated search engine for a company's internal data. All that stuff they've got stored away.
So basically, instead of employees wasting hours, days even, trying to hunt down some document or email buried in the company's system, Elasticsearch lets them find it instantly.
Bingo! Saves a ton of time and frustration, especially these days with the insane amount of data companies are dealing with.
You're telling me it's an explosion,
Wait.
and it's not just for internal use either, is it? I mean, Elasticsearch, it's big in e-commerce too, right?
Oh, yeah, absolutely. Think about it. When you're shopping online, that search bar, that can make or break your experience. Elasticsearch helps businesses make sure their customers can actually find what they're looking for. Makes everyone happy.
Oh yeah, we've all been there, right?
Yeah.
Those sites where the search function is like a total black hole. So Elastic's definitely hitting a nerve there. Now, they've also got this thing called the Elasticsearch Relevance Engine, or ESRE for short. What's the big deal with that?
Now this is where things get even cooler. ESRE, it takes Elasticsearch and injects a serious dose of AI. It's not just about matching keywords anymore. It understands natural language, like how we actually talk, and it gets the meaning, the semantics behind your search. So even if you don't use the exact right words, ESRE figures out what you're looking for.
So it's like reading your mind almost, getting what you actually mean.
Kind of, yeah. And it spits out much more accurate results. Way more relevant to what you need.
Okay, I'm starting to see the power of this. Can you give us like a real-world example? How does this ESRE thing actually work in practice?
All right, so imagine you're planning a kitchen remodel, okay? Big project. You need cabinets, countertops, appliances, the whole 9 yards. Now, in the old days, you'd be hopping between websites, searching for specific dimensions, materials, all that. But let's say a home improvement store is using ESRE.
Yeah?
You go on their site and you type in, I need a 30-inch shaker-style base cabinet painted white, and boom. ESRE serves up exactly what you need, plus maybe hinges, handles, even installation guides.
So instead of like 20 different searches with a million irrelevant results, you get everything you need in one shot. It's like it knows what you're trying to do before you even do it.
Right. Makes life so much easier. And think about this. By 2025, we're going to be generating something like 480 exabytes of data every single day. That's 1,000,000 terabytes per exabyte. As all this data piles up, being able to find the right stuff quickly, that's going to be more and more critical, right?
Absolutely, especially with more businesses moving online all the time. So, okay, the technology sounds amazing, but let's talk money. How is this all translating into, actual results for Elastic?
Well, that's the other exciting part. They just released their third quarter results for fiscal year 2025, ending January 31st. And they hit a record revenue, $382 million.
That's a pretty hefty number.
Yeah.
And that's up how much from last year?
Up 17% year over year. A pretty healthy jump.
No kidding. And I remember reading that their cloud services are a big part of that growth, right?
You're right on the money. Their cloud revenue, that hit $180 million. And it's growing even faster than their overall revenue, like 26% year over year. More and more businesses are moving to the cloud for all sorts of reasons. Easier to manage. They don't have to worry about the hardware, the software updates, all that. Elastic handles it all.
So for the user, it's just less hassle, right? They can focus on using the tools, not on all the technical stuff. Which makes sense. That's kind of the whole point of the cloud, right? Now, what about the bottom line? Profitability, that's what investors really care about.
Couldn't agree more. And that's where we see some really positive developments. Now, on a GAAP basis, they reported an operating loss of $4.6 million this quarter.
Okay, so still a loss. But I guess it's an improvement from last year.
Oh, yeah, a big improvement. That's an 82% reduction from the $26.6 million loss they had in the same quarter last year.
Wow, that's a massive turnaround.
It is. It is. And if you look at the adjusted numbers, the non-GAAP figures, they actually posted a pretty solid operating profit, $64 million, and that translated into a net profit of $67.1 million. That's a 78% jump year over year.
Okay, so from a big loss to a pretty decent profit in a year, that definitely says something,
Oh.
shows they're doing something right. And consistent profitability, that's the key, right?
Absolutely. That's what creates a sustainable business, keeps investors happy in the long run, less ups and downs, you know?
Makes sense. So let's get back to our original question. Is this dip in Elastic stock a good buying opportunity? What's the valuation looking like?
All right, so here's the thing. Because Elastic's not consistently profitable yet, using the traditional price-to-earnings ratio, the P/E ratio, that's not going to give us the full picture.
So what do we look at instead?
We got to look at other metrics, like the price-to-sales ratio or the PS ratio. This compares the company's market value to their revenue. It's a good way to gauge companies that are growing fast but haven't quite hit profitability yet. You know, it focuses on that top-line growth.
Okay, so what's Elastic's PS ratio looking like?
Right now, it's sitting at about 7.2.
7.2. So is that good, bad? How do we put that in context?
Well, it's all relative, right? We got to compare it to other companies, especially in the AI world, and also to Elastic's own history. So data from Y-Charts shows that since Elastic went public back in 2018, their average PS ratio has been around 13.1.
Okay, so 13.1 versus 7.2. It's a pretty big difference.
It is. It means the stock is currently trading at a 45% discount compared to its historical average.
45%. That sounds like a pretty good deal. What are the analysts saying? Are they bullish on Elastic at this price?
Well, the general sentiment on Wall Street seems pretty positive. The Wall Street Journal, they track like 29 analysts who cover Elastic, and 19 of them have a buy rating on the stock. 2 more have an overweight rating, which is also good. 8 are saying hold.
Okay, so a pretty strong majority are saying buy or overweight. What about sell ratings?
And here's the kicker. None. 0 analysts are recommending selling right now.
Wow, that's pretty telling. And those who are saying buy, what kind of price targets are they throwing out there?
On average, the analysts are predicting a price target of around $136.26. That would mean an upside of about 40% over the next 12 to 18 months. And the most optimistic analyst, they're saying $160. That's a potential gain of 65%.
Okay, so let's recap. We've got a company doing some really cool stuff in AI-powered search, a field that's only getting bigger. Their stock's taken a hit, but they're showing strong revenue growth, especially in their cloud business. Their profitability is improving significantly. Their valuation is looking pretty attractive, at least compared to their own history. And Wall Street analysts are, for the most part, pretty optimistic about their future.
You got it. So for all you listeners out there, if you're looking for opportunities in the AI space and you're not afraid of a little volatility, Elastic is definitely worth a closer look.
Absolutely. This dip could be a chance to get in on a company with a lot of potential upside.
I think so. You've got the discount, the strong technology, the market demand, the improving financials, the positive analyst outlook. It's all pointing in a pretty interesting direction.
So as we wrap up this deep dive on Elastic, here's a final thought for everyone. We're drowning in data these days, right? And it's only going to get worse. So what do you think? What's the long-term potential of AI-powered search? Can companies like Elastic help us navigate this data deluge? And beyond what we've talked about today, what else should you be considering before making any investment decisions?
Something to chew on, right?